entered the World Cup trading competition as a bit of a personal challenge. It also was a way of benchmarking my own trading against other traders like myself. I think being in the competition can help you become a better trader because you've got to use discipline and control. There's a temptation to, you can see like some of the other traders are doing really, really well, and there's a temptation to vary from your plan and so forth, but you need to be consistent with your money management and so forth, and have that discipline. The way I trade is I trade with a number of algorithm-based models across a variety of markets. And basically, originally I had been a discretionary trader, but found a lot of pitfalls with that, and I felt there must be a better way. And so I, over time, learned how to use those principles that I'd learned, but in a very accurate, specific way. And then ultimately, I turned my trading into automated trading as well. Some of the key influences in my trading have been, unfortunately, losses, I guess. So there's some harsh things that have happened along the way that have been part of the learning process. I haven't been like a lot of people who have, say, mentors like Larry Williams or something like that. A lot of it's just been kind of trial and error and working things out for myself. For my own risk management, basically I try to do a couple of things. Every system I trade with has a stop loss built into it. The other thing is I don't rely on any one method. So I would use a portfolio of models to spread both my risk and my opportunity across. And then I use money management in the sense that I would decide how much I'm allowed to trade per lot size per the dollars in the account, and then we can manage it both upwards and downwards. So when we're making money, if we do well enough, we can actually increase our lot size. Likewise, when we have our loss periods, if they're deep enough, then we will also likewise scale back, so that our profits and losses are always more similar as a percentage of the actual account rather than sort of the dollar value as such. I trade a wide variety of markets. I trade the softs, I trade metals and grains and treasuries, currencies, index, pretty well most things. And I do that because I like having the diversity. So I'm trading a number of different reasons. I'm trading a number of different markets. Some of them, there is sometimes some correlation between the markets, but often there'll be very little correlation, say between the price of cocoa and the price of gold, for example. And by having that diversification, that can help smooth out my net returns. And as a trader, I'm really interested in my net bottom line, and I accept that the individual methods are going to have ups and downs, and so the portfolio effect helps you to stick with that better.